It an agreement whereby a group of individuals facing similar risks that can share the fortuitous losses of the unlucky few by the transfer of such risks to the insurer who agree to compensate for the losses. Functions are divided into three categories, which is primary, secondary, and indirect function. Primary function content of risk transfer mechanism. It means we can transfer risk to a third party. For example, when we buy or purchasing insurance, it means transferring risk from an individual or entity to an insurance company. Another example, when we go to hospital because of accident, we can claim insurance to pay for our medical bill and things that related. Next, we have secondary function that contains 6 functions under it.
Next is secondary function of insurance. The first one is release fund, otherwise tied up in reserve. Insurance substitute a certain premium payment in place of uncertain loss payment, so they will able to avoid necessity of raising capital. And if there is any loss incurred in the absence of insurance, large reserve fund would be necessary. Furthermore, insurance has the effect of releasing this reserve for further investment and development. The second one, which is stimulate business enterprise. Insurance stimulate business activity to operate in a cost-effective manner, which is because the insurance enable business to undertake higher risk. This action help business run successfully, which translate to more job and increase in economic activity. Additionally, when an employee get injured on the job, it is business insurance that help to cover the cost of the employee's treatment and any potential wages interruption.
Reduce fear and worry. One of the prime reasons for entering into an insurance contract is to seek financial security in the event of a loss from an unexpected occurrence. Insurance offers support to the policyholder and helps to reduce the uncertainties in the business or in human lives. With the help of a policy, the insured party is protected against future hazard and also accidents. Although no insurer in the world can prevent the dangerous event from occurring, they can certainly help by providing some sort of financial protection to compensate the insured party. Reduce losses. The insurance joins hands with those institutions which engage in preventing the losses of the society, because the reduction in loss causes the lesser payment to the assured rate, so more saving is possible, which will assist in reducing the premium. Lesser premium invites more business, and more business causes lesser share to the assured. So again, premium is reduced, to which will stimulate more business and more protection to the masses. Therefore, the insurer assists financially to the health organization, educational institutions, and other organizations which are engaged in preventing the losses of the masses from death or damage.
Encourage saving. By purchasing insurance, it helps us to saving little by little using way of pay regular money every month. The insured will get benefit when the amount have achieved its maturity followed with the policy contract. Offer social benefit. Insurance can be considered as an effective measure to minimize such social problems. For example, it provides financial compensation against the losses due to such event. Indirect function. Under it, it has another function, which is investment of fund, which is accumulates large fund which insurer hold as custodian, and they will invest this fund in the public and private sector to earn profit. Next is invisible export. It is a service from a country to another country or globally that will help to generate an income to our country in invisible form. For example, Hong Leong and Assurance Berhad. Lastly, source of employment, which is generate numerous employment opportunity.
Peace of mind. First, do not have to worry if anything happens since our financial security is assisted and property is protected. Second, protect your beneficiaries in the event of your death. It is the best way to provide for a family once you are gone. Third, insurance will help pay for funeral expenses, cover debt, pay children's college tuition, provide a legacy for your family, and also tax-free income.
Loss control, set of risk management practice designed to reduce the likelihood of claim being made against an insurance policy. Second, identifying risk and is accompanied by voluntary or required action a policyholder should undertake to reduce risk. Third, policyholder may benefit from loss control program through reduced premium, while insurer can cut down their costs in the form of claim. Social benefit. Insurance help reduce the burden of uncompensated accident victims and the uncertainty of society. Investment of fund. Coverage provided include death benefit, disability, and critical illness. Broader selection of investment opportunities, greater management expertise, and lower investment fee that investor might be able to obtain on their own. Invisible earning from abroad that contribute to the balance of payment as a result of transactions involving services such as insurance, banking, shipping, and tourism.